agricultural outputs, and the prices out there can move quite a bit, depending on rains, depending on transportation and all those things. But in any event, so it was at 5.8, and but this actually, given the MPC understood what was driving it, and the other thing which was important was the other elements. For instance, the excise taxes that were applied on December 1. And that, as you know, there's an impact of about 3% that is still going on. The inflation remained under control. Now, it's true it has increased a bit to 5.8, and there is other factors, agricultural, maybe food prices and things like that, which may push it around. But still, the MPC felt comfortable because, in effect, the first round effect, which is for instance, from the taxes and things like that, that would feed through to the headline number. But the second round effects, meaning in terms of that feeding into other parts of inflation, those were under control. For instance, this is why non-food, non-fuel continued to fall. So the MPC was quite comfortable with the dynamics, and also felt that we stood ready to change course in case dynamics didn't follow that expectation. Secondly, on the banking sector, the performance here, the system remains liquidity. There's ample liquidity in the system. If you remember last time or some time ago when we were talking of the post, let's say, Imperial Bank debacle, so talking October, talking November, talking December, liquidity was some concern. But actually what was of greater concern was not just the level of overall liquidity, but the distribution of liquidity across the system. 24.9%. So that's quite good, quite strong. Now, I think also with the good rains and all that, the volumes will also be large. So there'll be a lot more, let's say, earnings, benefits from this. Horticultural exports also have grown by 7.6%. Diaspora remittances or remittances from the diaspora have also grown. So those are positive indicators. Two other things I need to mention. We have very strong tourism, has very good prospects. We have very strong forward bookings. And just to give you a number of the forward bookings, I think it is in your presentation, but just to quote it for you, the forward booking numbers that we have are in the order of, well, the average, let's say for August, we're in July, the average for August is 62.4%. And it ranges from 83% to 61%. And again, in September, it's also large, it's 51%, and then it grows on to 56%, how it may impact our country. But here we are today. How would it impact our economy? I think in several directions, there are several points I want to make. The first is that the way things are today, our outlook, we have not been affected by Brexit, meaning there hasn't been any negative shock that has come to us through Brexit as such. So if you look at the FX market, if you look at or other markets, even our trade, there hasn't been any sort of fundamental change. Now, it's true, the sterling pound has weakened, and therefore if you are holding sterling pounds, then you'll probably be a bit out of pocket. I don't know if that expression means anything to us, but if you are thinking of the dollar value or Kenya shilling value of your sterling pounds that you are holding, then yes, you'll be shocked. But I think the point here is that the I mean, that is a one-time effect, okay, in terms of that. But it doesn't change your transactions in terms of exports and things like that.